morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, December the 18th. Well, steady to higher trade overnight in the feed grains while the soybean complex continues to press the downside. Market bulls in the bean complex are hard to find right now, perhaps checking out for the holiday season. We did make new contract lows in beans, currently 14 to 16 lower, let's call it. We also had new contract lows here in the meal, down another $3 to $4. Oil is a full penny lower now, carving out fresh 3-month lows. Malaysian palm oil prices overnight were down another 4%. Corn is steady. We were higher. Now we've just flipped here to the downside, about a half penny lower, seeing some spillover weakness, I suspect, from the bean complex. Wheat is still holding on to slightly higher trade, 1 to 3 better. Wheat is the best performer in the ag space, likely adding some additional weather premium following the production downgrades from the world's largest exporter, that being Russia. Speculative traders yesterday, there were net sellers of about 8,000 to 9,000 contracts in corn, beans, and in oil. We've got the money manager long position in oil now, down to just a few thousand contracts after peaking at right around 75,000 contracts just about a month ago. U.S. lawmakers continue to work towards a stopgap funding measure to keep the federal government operating for another 3 months. We continue to hear chatter that within the legislation will be language that will allow the sale of E15 gasoline year-round versus a typical 10% blend. The higher blends could add about 25 to perhaps as much as 50 million bushels of additional corn demand over the course of a year, something the market bulls could desperately use right now. The EIA is expected to release weekly ethanol production figures later this morning. We're expecting to see production fall in about 315 to 318 million gallons versus 316 million the previous week. And overnight, Chinese customs data did show their imports in November at only 300,000 tons of corn. That was down 92% from Nov of a year ago, and in the first 11 months of the year, their imports have reached only 13.3 million metric tons, down 40% year over year. South American weather continues to be non-threatening, which is pressing the bean prices. Some dry pockets are likely to develop over the southern third of Argentina by year end. However, at this point, yield threatening stress is not expected to be widespread. I do think we'll see higher production estimates continue to come out of the southern hemisphere. Overnight, March corn has traded both sides of unchanged. I thought we might see another run to or above that 450 level, but with the weakness here in the soy complex, that is appearing less likely. Next support comes in below the market at 434. Spot Jan beans have been trying to hold. We just actually took that out not too long ago on the weekly bar chart at 963 3/4. Next support really doesn't come in now to about the 935 level, a level I thought that we'd test here by early next year, that being the low from August, and perhaps we might start closing in at a little sooner than expected. New 3-month low for oil overnight. Next support there comes in at the 39-cent level, that being the September 25 low. Meal is looking more and more destined like it's going to challenge that $280 level, that being the low from August of 2020, despite the speculative short position being a near record large. I do look for wheat to find some pretty good support here above the recent lows, given the tight supplies among exporters, particularly given the poor outlook for the Russian crop. Tunisia is tendering for 100,000 metric tons of both milling wheat and durum wheat for the Jan-Feb timeframe. So mixed, trying to hold some support in feed grains, continue to see lower here in the soybean complex. Thanks for listening, everyone. Have a great day.